What's going on, everybody? Thank you so much for joining me today. If this is your first time, make sure you hit that subscribe button and all that cool stuff. Give us the thumbs up. As you can see, I am kind of messing with some new settings here. I got the Streamlabs OBS overlay plugged in, so kind of messing with some new settings here. All right, cool. I do like that. So so it seems to be working and everything seems to be working fine. If it is not working fine, make sure you drop me a line in the chat so that I can maybe fix some stuff. But we're all learning together here. So let's get right down to it and take a look at what we got going on. Now, for some reason, there we go. Just perfect. All right, so let's take a look at what we got going on today, guys. We'll just dive right into it, guys, and take a look at Bitcoin real quick. And I just wanted to kind of talk about the trading view idea that I had posted earlier. You guys go check it out in the Discord. I think you'll really like it. It's poignant. So I'm just going to get philosophical and long-term with you guys here for a second. So just looking at Bitcoin price, every time we see here that the $6,000 psychological support has been tested numerous times in Bitcoin's history here. I remember because I bought a significant amount of Bitcoin when we initially broke over 6K, and I was not really worried when we fell down here the first time, especially because we had that beautiful massive run up, and it was just a lovely time, and gold was flowing in the streets, and coffers were overflowing, and everybody was bullish on everything, and ICOs were abounding, and it's just hopefully you all remember the time. And if you don't remember the time, well, stay tuned, because you're going to see that time again, and it's going to be even bigger and even better. But you see here that initially, after Bitcoin broke out of the trading range that it had been in right here in the $4,000 to $5,000 region, we broke 6K, and then we came back and tested it, and that was our first test, and that was actually at 55.11, give or take. So I'm giving a wide berth here. So, but that psychological region right there. And then we had the run up to 19,891, and we did not come back for some time. And then we first tested support in February. So 2 months, ladies and gentlemen, from the 15th of December. Never forget the 15th of December, all the way down to, I think Bitcoin retested the point of control at $6,400 today. All right. I'd like to see that. Always nice when we retest the point of control. The price does like to go back to the point of control. It's something, VPVR, volume profile strategy, I'm still working on adding into my toolbox. So it's something that I'm working on developing a proper strategy for. But I have learned that it's quite accurate. And I know that you, Alex, I know that you and the Fisher, I mean, those two are intertwined with you, and I like that, and I respect that a lot. You're good at what you do. Just not calling EOS shorts. Now, we fell back down to, again, back in February, the 6th of February here, maybe the 5th of February, we fell back down and we retested even closer at 5,873. And when we sprang back up, we were able to achieve a price of 11,775, 11,645 after a brief retracement. And what's interesting about that is that if you chart a fib retracement, as I have right here, a fib retracement of the move from initial bounce off this support area all the way up, the 618 fib retracement is the target roughly that we hit right here. And so that, that's interesting, because 618 is a magical number. When all you have is a hammer, everything looks like a nail. Hey, and sometimes you hit a nail, and sometimes you hit a baby, man, Now Alex hit a baby today. So then we fell back down, and you could count this as a test, but I'm not going to, because we didn't fall below 6,000 or hit 6,000. So this was a fake out. But we fell back down here in June, and when we bounced back up, we were able to hit $8,488, and that, interestingly enough, is a 618 fib retracement of this level right here. So measuring from the psychological support level of around 6,000 up gives us a fib retracement of roughly where price hit. Oh, well, that's interesting. We're starting to see a pattern here, I do believe, good Watson. So then we came back down and retested the support here at 5,900, and we were able to hit 7,402. Now, that was actually a 786 retracement of 8,488. Or, excuse me, a 50%, measuring the opposite way, excuse me. It was a 50% retracement. But then our next test here at 5,900, that rally was up to 7,402. So, I'm sorry. So this one, I'm sorry. No, I'm measuring wrong. So this fib retracement, 618 right here, 6936. So 6823, 6810. So I'm being, why are babies almost throwing themselves? I don't know, man. Do you have a rattle attached to your hammer? That's a possibility, dude. You could have. I don't know. Sometimes when you're looking at stuff, you got a bias, and sometimes you hit. Sometimes you're right. Sometimes you're wrong, man. It's all good, dude. It's part of trading. Nothing's 100% all the time, and that's why it's just the most important thing is covering your losses. You got to just stack the odds in your favor, so that when you win big, and when you lose, you don't lose that much. 2R, 1R, just basic stuff that we talk about all the time. So, anyways, I'm just trying to explain this developing pattern of these major movements of Bitcoin. So when we come back down and retest this psychological support again, as we might have here at 60.33, well, the fib retracement would have been at 62.41, and we see that price did blow right past up above that. So this is a 50% retracement, and now we've fallen down and we bounced right back off that 618 period. We were babies a bit of. Yes, Alex, they were a metaphor. So, yeah, hopefully, I kind of like this new setup. It's a little cheesy, but it's cool, and I think that I'm able to put everything that I want in the stream a little bit better, and I'm not all over the place. And it's going to be very easy for me to just replace the chat box with a guest if I have a guest on. So anyways, I'm expecting, but my whole point with this is that, support and resistance, one of the common themes is that, or one of the rules of support and resistance is that it's kind of like a springboard, and the more and more you test support and resistance, the weaker it gets, the less likelihood it has to hold. So I know that sometimes when we're near support, lots of people are very bullish because they think that that is an area where price is likely to reverse, and it can be. However, you have to look at how many times has that support or resistance been tested. That will let you know how. Oh, awesome. Good. Sweet. Thanks, man. Visually appealing is very important to spreading the brand. So how many times support and resistance has been tested will let you know how strong the movement will be. So we see how strong this initial movement off 6K was. Extremely bullish. Extremely bullish. And then the next test, not so bullish. 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 And so a descending triangle forms out of this. And the descending triangle is by nature bearish because you have a constant supply of demand, but a decreasing level of supply. And what that means is that supply is lowering itself to meet demand, and generally supply overtakes demand and pushes price lower. And this is the capitulation style level event that I'm talking about. I really don't think we're anywhere near out of the weeds yet, guys. I know that it's exciting to look at this price action, and we've had 3 candlesticks, but look at this momentum compared to this. Compared to this momentum right here, momentum being the length of the candlesticks, how far price is able to travel in one candle bar. It's just this is not impressive. This is not bull market shit right here, guys. Just to say it bluntly, this is not bull market shit. I'm actually going to be really surprised if we make it above 64.05 here. If we make it above this previous level of resistance right here, I would be quite surprised. I think that we're going to see a retest of support and potentially a bounce back up here to 64.21, which is going to be the 618 fib retracement of this recent movement, this bounce off support, because we already had the 618 here. Boom, 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 boom. So I think that is the most likely thing. And then the next, and then we'll probably fall back down again. Then the next one will be a 618 fib retracement of that potentially, or we just break all the way down through. Yeah, exactly. It's the confluence of everything coming together. The panic selling, the loss of excitement, the full bear market. I'm fully prepared with my Bitcoin position to ride this bear market out for the next 12 to 18 months. I mean, just being realistic with you guys. I know that that's not really what we want to hear, but it's, you just have to look at this. You have to look at this and zoom out and look at the big picture and not focus on, it's fine. We're traders. So we go to the 1 hour chart, the 5-minute chart. I trade the 5-minute chart all day long on BitMEX. I have 3 monitors. BitMEX is always open over here, and I'm always on BitMEX. I'm always on the 5-minute chart. And, it's going pretty well right now. I've been riding Ripple for a hot minute right now. I got out of my Bitcoin long. Still holding the Ripple long, so I'm going to see if the moving average holds. But moving on. How am I hedged? Do I have a hedging strategy that I can share? Well, so I think the simplest way is that the majority, without getting too personal, the majority of Bitcoin that I would have on a platform like BitMEX would be in a 1x short, which would hedge my entire position. Alternatively, I have not put all my capital back into Bitcoin. So I still have profit sitting on the sidelines that I'm able to dollar cost average in as we go down. So there's multiple things that you can do. I think that if you are, probably the safest route for an individual is BitMEX, honestly, because I do not think that they have a perpetual swap contract on Deribit, and the liquidity on Deribit is just not as impressive. However, that might be your best option, because BitMEX is not available to United States customers. It's called a VPN. So there's really only 3 ways to hedge. You can keep a perpetual 1x short on Bitcoin until you think the bear market's over. You can cash out your profits and dollar cost average in as you go down, or you can diversify your portfolio. And Bitcoin isn't the only thing I hold. It's the majority of what I hold. But I do have other holdings. Like I have a 401k, I have SPX, I have DJI, I have some Google stock, I have some Amazon stock, just that basic stuff. I mean, the only way, if you're going to be 100% in Bitcoin, the only way to hedge your position is to 1x short Bitcoin. That's the only way. If you want to be completely safe about it. I am not going to sit here and say that you need to diversify your portfolio by investing in altcoins, because if Bitcoin goes down, it's going to bring the altcoin market with it, because it's the underlying pair. So that is, again, that's personally how I'm hedged with a 1x short. I've been pulling out of that and trading off of that and then putting it back into my 1x short, I think is the smartest thing to do. It's worked out for me pretty well since around 12K. And yeah, is that good? Does that answer your question? Again, if you're going to be 100% in Bitcoin, the only potential is by shorting Bitcoin. Unless you're going to take Bitcoin off the table and move into cash, and then you have to pay attention to the markets and buy dips. Which can be difficult to do if you're not a full-time trader or if you're a recreational trader. So the safest option is to just leave your 1x short open on Bitcoin and ride out all the negative news headlines, ride out the crash down past 6K, ride out, Bitcoin is dead, blah, 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 bullshit. And then when you start seeing all that stuff, then I would probably recommend edging out of your short position, and then you can start adding to a long position. This is how hedge funds trade. They'll have 10 to 20 trades open, short and long, and they'll add to winning positions and subtract from losing positions, because they're about preserving capital and taking consistent, steady, good gains. And when they do see a good setup, they tend to bet big. They like to put a good amount of capital behind a really strong bet that they think has a high probability of success. So, all right, let's take a look. Let's zoom in a little bit. What's going on with current price action? Broke bearish out of this consolidation period. We've come back up to the 786 and rejected from the 786. I don't want to put this on here because I've just got too many gosh darn lines on my chart. I really don't think we're going to make it out of the woods here past 6,400. I really highly doubt that. Take a look at the hourly and see what we were going to do. So yeah, I am too big of a man to say that I told you so, but I did tell you so. I had, called the 63.36 target that we hit that real nicely. We hit that right here. That was quite beautiful, and then consolidated, and we've broken past it. We have managed to close on an hourly level. We see that we just hit this top right here at the 0.5 fib extension of this movement. So simply put, all I did was take a trend-based fib extension and measure this one bullish candlestick movement. I'm looking for an impulse wave movement. So we have wave 1, wave 2, and wave 2. But you have to zoom out to really see it. And again, I'm not a huge Elliott wave guy, but I do know how breakouts occur, and they move in 5 waves. So you have a breakout, a retracement, a breakout, a retracement, and then generally a final impulse wave that usually culminates in a buying climax, because all the buyers on the sidelines finally are seeing what they think is a fully bullish asset, and they buy into it, and by then there's just no resistance. All the buyers have depleted their funds. There's no more potential buyers. Everybody is a position buyer, and all the potential sellers now are able to push price down quite easily, or position sellers for that matter. There's just nobody to prevent price from going down, and all those position buyers now become potential sellers, which accelerates the decline of price. So I am expecting us to see a little bit more bullish movement. We could now, I'm not gonna lie, we could move up here around 6,400, but I just don't think it's gonna last, guys. And if it does, then I'll change my tune. The market can. I don't control how the market moves, but I'm still overall quite bearish on Bitcoin for the short term, because we have not had the capitulation style event that I want to see. It's just not. It's just not how markets bottom, guys. It's not how markets bottom. It's just not how markets bottom. All right, so let's take a look at Ethereum. Again, just look at this. Look at the, Ethereum is a similar story. We were able to break above 200 and pulled down, retested 200. We were able to move back up, tested resistance, came back down, tested 200 one more time, and then it was off to the races. And then we have not, this is a little different from Bitcoin's price action. Ethereum came down, honestly, much slower. Ethereum came down much slower. This entire period here from January to February, as opposed to Bitcoin, experienced much less momentum moving to the downside. However, the problem here is that, the price, so I guess the percentages are roughly the same, but linearly, they're different. Logarithmically, they're similar, but we didn't come down to test this vital area of support. 200 has been a vital area of support, and we can see just how 200 separates price action above and price action below. Cold, man. So now we've come down to test this 200, and we're not seeing a powerful spring off of it whatsoever. We were able to spring up to what, 254, and then crashed right back down to right around the same region. And now we're consolidating, and people are getting excited over 4 bullish candlesticks, and look what's going on with the current candlestick right here. Now, that doesn't necessarily mean anything. The candle's not closed. We've got quite a, actually, we only have 30 minutes until this candle closes, and that is an evening star candlestick formation. That is generally a bearish reversal candlestick formation. So this could form a shooting star pattern right here, and then we're right back to what we were talking about, and that would coincide very nicely with Alex's call to short Ethereum. How do I feel about the fact that 80% of Bitcoin has been released, and we have less than 1% of the population holding said Bitcoin? The remaining 20% will take the next 100 years to release, with the majority of that being done by 2035, I believe, if I have my numbers right. How do I feel about that? That doesn't change how I feel fundamentally about Bitcoin, because the fact that, you could say the same thing about, I guess, wealth, even though it might be a bad analogy. In my opinion, this supply onboarding bottleneck is what's causing the extreme volatility. Well, the lack of liquidity is what's causing the volatility. The lack of active market participants. So yeah, you're exactly right. The more active market participants you have, the less volatility you have, because the more active market participants you have in any market, the more willing buyers and sellers you have at any price. And when you have, so for example, if you had an infinite amount of buyers and sellers at any given price, then price would never move, because the only thing that moves price is when sellers are no longer willing to sell at a price and they're only willing to sell at a higher price, and when buyers are willing to chase that price up. So yeah, the more Bitcoin will experience reduced volatility. Yeah. So, actually, I would argue, look at what Bitcoin volatility has done. Alex, if you're still in here, do you know what the ticker symbol is for the Bitcoin Volatility Index? I'd appreciate that so I could look at that. But the volatility of Bitcoin has actually reduced dramatically. And I would say that if you looked at the chart of Bitcoin, if we were to go, I'm looking at it on Coinbase, but if we were to pull up Bitstamp, this is Ethereum, but if we were to look at it on Bitstamp, we can see that when you went from, you had 90% drops in Bitcoin multiple times in the first few years of its existence, after being listed on exchanges for the first time back in the days of Mt. Gox, to rise up to $1,000 and then down to $100. We're not even experiencing that with Bitcoin's price volatility. Price is only down about 50 or 60%. So really, volatility has really gone down. Now intraday volatility has gone up, but the percentage range of momentum, that's awesome, man. You are a lucky duck then. Been in crypto since 2013. Congratulations. I've been hearing, dude, it's fucking crazy, dude. It's not the Wild West anymore. We're starting to get tamed a little bit, but yeah, this is, honestly. So yeah, the volatility index is at the lowest rate it's ever been, and obviously you see that with price contracting. I think we're still going to see massive increased volatility as we move forward. However, I think that we are seeing, I've made videos about this. Like, feel free to, if you check out some of my past breaking Bitcoins, I talk about institutional money coming in all the time. And Morgan Stanley just put out, it just adds on and on and on. It seems like I have more to talk about every day. Morgan Stanley just came out. Goldman Sachs is actively working on it. Coinbase just got listed for custodial money ownership, and they've got the New York Financial Regulatory Board allowed them to, got nothing to show for it but knowledge and contacts. Oh man. Hey, don't feel bad. Tone Vey has lost all his like 80% of his Bitcoin in some pool schemes back in the day. Interestingly enough, I was just noodling around on Discord, and I got invited into this server, and I like checking out random servers on Discord. Why not? Usually I don't have a lot of time for that stuff, and Bitcoin's done very well for me. But I never messed around too much with all that like faucet stuff and like free crypto spins and all that stuff. Anyways, these guys are basically trying to run some kind of web mining server. And I was thinking about like, well, I'll just set my laptop up. But then the more I learned about it, I'm like, I can just run my own miner on my own laptop. Like, I don't need your guys' like little sexy like web app. But not saying that NW. I'll let you do your thing. I have a paper. Yeah. So, well, hey man, I appreciate you stopping by, dude. It's been fun. It's been real. Let me see here. All right, let me get recentered. Well, I guess I'm not going to be able to view my own video. No, man, I really appreciate you stopping by. All right, apparently Alex stopped watching because he was not able to provide that for me. So anyways, let's do our technical analysis of Ethereum. So anyways, I'm expecting this range to actually break to the downside. Now, if we are able to break this trading range above $208, then again, this range is 208.29 to 190.80. So you're talking about an $18 range. Stuck on a long ass bus ride. Well, I appreciate you. I appreciate you filling your time with my noodlings about Bitcoin, man. I'm not sure. Are you from the Discord, brother? I'm not sure if you're aware, but we have a very nice Discord. I mean, we mostly trade. That's what I do for a living here, I'm a professional trader. So just trying to spread the knowledge and grow. So if we break this range to the upside, we're looking at a price target of 227.55. If we break to the downside, we're looking at a price target of 171.99, and that's going to be that same dip below 200. Oh, but you play so coy, Micah. Well, hey, man. Feel free to check the Discord out. It's just discord.crackingcryptocurrency.com. All the links are in the description down below, as always. And I like old school. I like old school Bitcoiners, man. I'm a Bitcoin maximalist. I trade altcoins. I guess for about 20% of my portfolio. Honestly, the rest of it's on BitMEX that I actively trade with. And yeah, that's what I do, man. I believe very passionately in Bitcoin for the future. I guess I didn't answer. I talked about your question a little bit about reduced volatility, but simply put, Bitcoin is the best technological solution to the problem of money. Gold was a natural evolution of society. Banking was a natural evolution of gold. Central banking is a natural evolution of banking, and Bitcoin is a natural solution to central banking's problems. Now, I'm really not one of these guys that's going to sit here and pontificate long elaborately about the evils of central banking, because central banking is not inherently evil. It's just a tool, dude. It's just an invention of mankind to create worldwide economics, and it's been pretty goddamn successful at that. But it has shortcomings. It's just not a perfect system, and we are going through a deleveraging situation right now. I saw the stock market turned around a little bit this morning. I was, sometimes I do trade the DJI or the SPX or a little bit of my Amazon stock. Amazon's pretty goddamn volatile right now, but I'm not actively trading the active markets right now. It was a leading question. But a good one, man. And I don't think enough people talk about that stuff. So many people are just buy, sell all the time, and that's kind of my goddamn life. But it's definitely good when people understand passionately the fundamentals of what they're talking about. And this is why, in addition to listening to all my in addition to watching the charts for freaking 8 to 12 hours a day, I like to fill my ears with podcasts. I like to listen to developer chat, DevCon, HackerCon. Just got to stay up to date, man. So Ethereum, again, is accumulating quite bearish to me, honestly, right now, looking at the one-day chart. We broke. Now, the Fisher is about to give us a buy signal right here, but I think it's going to be short-lived. Again, we see that this range of the Fisher buy signal, the Fisher passing over the trigger line, was only able to move us, because you got to realize that you're only entering once the candle closes. So this would have given us potentially a... Let's see here, from 199, it would have given us a $3 trade. Minute for the redistribution of the world's wealth. Hey, are you, God damn, what's this, Calum? Yeah, Calum, yeah. Sorry, I can't see it very well on the chat screen, but yeah, I was talking to you the other day about, you're the 0Z guy, right? Yep. Yeah, you are in a Discord, man. We were chatting the other day. That's what's up, man. Yeah, I like your paper, man. You've got some really good ideas. I think I'd have to chat with you a little bit more to get into the specifics of it a little bit, because I think obviously we talked about crypto anarchy, and we fundamentally agree on a whole lot of things, but actually that helped me think about some things a different way, because I am economically conservative, and so and I'm also, you know, I believe in a meritocracy. So I don't think that I have a bias to think that there's nothing inherently wrong with concentrated wealth, because typically wealth gets concentrated in the hands of people who know what to do with it. They know how to grow the economy. However, and capitalism has been amazing for the world, lifting half of the world out of poverty in the last century. But that does not mean that there's not a better way. Nice, man. Well, I'm really excited to see what you come out with, dude. You know, I'm not a huge developer, but I've got some guys that are on the team. I think they'd love to take a look at what you got. But yeah, I mean, there are constant improvements for humanity and mankind to make. I don't know if I necessarily believe that the fundamental issue is economic redistribution. I think that the fundamental issue is perhaps redistribution of empowerment and responsibility. I think that there's a huge lack of well, hey man, you've come to the right place if you want the opinion of a trader. Delete. Yeah, well, there's hierarchy in everything, man. I mean, you know, if you want, you know, there's, because we make value judgments all the time, so you have to have a hierarchical system when you're gonna assign value to things, and we naturally assign value to our things in our life. But the problem with that is that when you have a hierarchical system, you do get people that are dispossessed, and that's why politically there's a right and the left, because the right typically stands for hierarchy and the left typically stands for those who are dispossessed, and you have to have both. And we've just had a complete, you know, as an American, we've just had a complete breakdown of our political discourse. I mean, we're far away from Aristotelian philosopher kings. You know, that's a system I could kind of get behind. Not saying that I really like Plato's Republic all that much, you know, or the Spartan military autocracy. However, we've got a lot of improvements to make as humanity, and I think that Bitcoin and the philosophy of anarchy is what's going to push us that way. So now that we've alienated every single other person that may or may not be watching, I don't know. I can't really see on my OBS who's all watching. Perhaps just you. I appreciate it, man. Thanks for holding in there. Still trying to grow, man. So let's take a look at Ripple real quick, and I think I'm going to close out my analysis. So again, Ripple moving in a really, really tight consolidation pattern. More bullish to me, however. Ripple looks much more bullish. It seems that there's a lot more buying here than selling. So a potential break to the upside here. So we're looking at an upside of 52 cents. But the rest are all not the good 1%. There are a few at the top who don't agree with the 1%. Issue is they might be charitable, but the rest are not the good 1%. Need free market capitalism is yet to go. Right. Yeah. We absolutely do not have a free market. I mean, you know, you can look at you know, any issue. You can look at any issue in. I think that there are very few issues that you cannot ascribe fault to the government. You know, the government just pretty much gets in the goddamn way and makes things really, really, really bad for human beings. You know, anything you could think of, you know, and I'll explain it to you why it's the government's fault. But, you know, such is the life of a crypto anarchist. So really looking for a break to the upside of 52 cents. So quite long on Ripple. However, I'm going to have my stop loss right here at about, you know, again, if we break down below, I'm going to need to see a daily close above 47. Otherwise, once we start moving up on high momentum or high volatility, you could enter into the trade. We do see falling volume, which is what we do want to see in consolidation. And we see that there hasn't been a significant uptick either in longs or shorts. Both are slowly, gradually growing up. So we are seeing rising open interest in Ripple, which is good as well. So Ripple looking to break to the upside. Let's take a look at one altcoin. And I think I'm going to look at Wanchain, because I'm interested in Wanchain right now. So here's what we're looking at with Wanchain. And I'll go ahead and turn Ichimoku off and as much of this crap as I can. And just keep it simple. Okay. So looking at Wanchain on the daily chart looks quite bullish to me. And I'll explain why. we had a selling climax right here with an automatic rally, and we look to be in a period of accumulation. There is much more bullish momentum than there is bearish momentum with a rising trend. It could be bearish in the short term. However, we look at our trading range right here, and we do have an attempted breakout right here. We did have a candle close, but then we had immediate retest, and that's because alts are kind of dropping across the board right now. Oh, so let me close that. Sorry about that. So alts are kind of dropping across the board because Bitcoin is moving up. So this is something natural. This is a good opportunity to accumulate altcoins, I think, at pretty cheap prices, because I think the market is still in the short term bullish, although I think we are looking at a massive correction that is still looming over us. This, I understand that we've just been through a massive correction, but we're looking at much, much more pain. And now the current candle is looking like it is going to be a reversal bullish candlestick. So we'll see what happens here over the next couple days. But I think that you could probably set, or what I would do is trying to accumulate this dip is probably not a bad idea. We see we pulled back here to the 0.5. We could pull even further back to the 1654. However, the worst case scenario, I think, is that we fall back into this trading range, and we were seeing higher lows. So low here, higher low here, higher low here, and I'd like to see an established higher low here, and then eventually the breakout, because we do see a fairly consistent level here of resistance, a fairly strong level of resistance here. So a natural pullback to test this resistance of the trading range is natural before the breakout, and then we simply measure the width of the trading range, and then we just project that upwards to get our targets. And so we're looking at a target of 2098. Which is quite a movement for one chain to make. And I think with some of the bullish news that's coming out about one chain, I think that 20% move is entirely possible. So with that said, I'm going to go ahead and get off of here, guys. I appreciate you guys coming through for the night, and appreciate everybody who stayed and watched. So make sure to check out discord.krakencryptocurrency.com. All our socials are linked down below as always. I've been Justin Wise, lead analyst for Kraken Cryptocurrency, #1 source for trading signals and trade ideas. You guys have a wonderful night. Peace out.